Once upon a time, the economy had a rhythm, a kind of flow. Not perfect, not always fair, but functional. You worked, you got paid. You took that paycheck to the corner store, the local diner, the mechanic down the street. You bought clothes for the kids, you repaired the roof. You saved up for a vacation, maybe a used car. Your money moved, and in doing so, it kept the whole thing going. Because your spending wasn't about you. It was someone else's income. It kept small businesses open. It gave other people jobs. It paid someone else's rent. And then they spent their paycheck. And it all rolled forward. That money flowed through neighborhoods and towns and cities like a circulatory system. Not perfectly, not equally, but enough to sustain a kind of balance. It was the post-war economic model. Flawed, yes, but powerful. For most of the 20th century, this cycle, work, pay, spend, produce, repeat, wasn't just the theory you read about in Econ 101. It was how life worked. It built the middle class. It made home ownership possible. It sent the kids to college and let retirees grow old with dignity. It gave people a stake in the system, a sense that tomorrow might be better than today. That progress was possible, not just for the rich, but for working people too. Even if you didn't love your job, there was a basic social contract. You put in the work, you'd get enough to live on. If you played by the rules, the system would more or less hold up its end of the bargain. But over time, that bargain frayed. And now, that cycle is broken. We don't talk about it much, but we feel it. In the stress, in the uncertainty, in the silent panic when the rent goes up but the paycheck doesn't. We see it in the boarded up storefronts, the debt notices, the side gigs just to stay afloat. The truth is, the economy no longer flows the way it used to. Because today, work doesn't guarantee a living. Paychecks aren't keeping up with prices. And people can't afford to spend, not the way they used to, not even close. The money is still moving, but not through neighborhoods or communities. It's moving up, into private equity portfolios, offshore accounts, share buybacks and stock bubbles. The rhythm is gone. The flow is broken. And if we want to fix it, if we want to rebuild something that actually works for a majority of the people, we have to stop pretending we're still living in the 1950s. The old economy is gone. We're not in an industrial age anymore. We're in a post-work, hyper-financialized, digitally automated, wealth-concentrated age. And if we don't adapt to that reality, boldly, deliberately, structurally, then collapse isn't some distant warning. It's already in motion. What we need now isn't nostalgia. It's redesign. We need policies that reflect the actual shape of today's economy, not the fantasy version sold to us in a campaign ad or a Wall Street press release. That means reestablishing the flow. That means putting money back in the hands of people who spend it. That means a universal basic income, not as a luxury, but as a new foundation. And it means confiscatory taxes on extreme wealth, not out of vengeance, but to restore circulation. Because without those changes, we're not headed towards growth. We're headed towards collapse. And the only question left is, do we act in time? So what happened? How did we go from a cycle that worked to one that's spiraling out? Let's start with wages. For nearly 4 decades, American workers have been doing more with less. Productivity has soared. We're talking about historic levels of output per worker. People are working faster, harder, and longer hours. The gig economy turned every driver and delivery person into a contractor, stripping away benefits and job security while demanding around-the-clock availability. But what did workers get in return? flat wages. And when you account for inflation, shrinking wages. That's not just a coincidence. It's by design. Starting in the late 1970s and accelerating through the Reagan era, we shifted our entire economic model toward one thing: maximizing shareholder value. That meant suppressing labor costs, weakening unions, offshoring manufacturing, and automating everything that could be automated. Jobs didn't just disappear. They were deliberately transformed into something cheaper, more flexible, more precarious. And what was the advice to workers left behind? Learn to code, go back to school, get a side hustle. In other words, go figure it out yourself. At the same time, the cost of living exploded. Housing prices skyrocketed, outpacing wage growth by orders of magnitude. Healthcare became a maze of premiums, deductibles, and surprise bills. College tuition ballooned, loading a generation with debt before they even entered the workforce. The middle class, once the engine of American prosperity, started to buckle. The working class, forgotten. The poor, criminalized. And yet, even as people were falling behind, the economy was growing. The stock market hit record highs. Corporate profits surged. Billionaires doubled their wealth. But let's be clear, that wasn't growth. That was extraction. And here's the critical point most pundits miss. When everyday people can't afford to spend, the economy doesn't slow down. It hollows out. Because economies don't run on corporate profits. They run on demand. On millions of people buying food, clothes, services, experiences. When people can't afford that, businesses shrink. They lay off staff. They cut corners. And the cycle spirals. Even if you're a CEO or an investor, you're not immune. Because if no one can buy your product, your profits won't last. This isn't a political theory. It's a structural failure. The kind of failure that turns recessions into depressions. That turns economic inequality into political instability. That turns societies against themselves. The truth is, we didn't lose jobs. We broke the feedback loop between labor, income, and consumption. And without that loop, capitalism can't function. This isn't just about ideology anymore. It's about math. It's about physics. It's about whether or not the machine can still turn. And right now, it's stuck. Now, some folks cling to the old fantasy. The one that says if we just cut taxes for the rich, slash corporate regulations, and keep the government out of the economy, prosperity will magically trickle down to the rest of us. You've heard that before, for like the last 40 or 50 years. Lower taxes on the wealthy will lead to more investment. More investment will create more jobs. More jobs will lead to more prosperity. Everybody wins. That was the promise. But here's the reality. It never trickled down. It flooded up. We spent the last 40 years testing this theory. It's failed over and over and over again. The result? The top 1% now owns more wealth than the bottom 90% combined. Let that sink in. A handful of people, sometimes literally a few dozen individuals, now possess more economic power than hundreds of millions of workers combined. Not because they built something new or created more value, but because they captured the system itself. This wasn't a natural outcome. It was a deliberate policy choice. We cut top marginal tax rates from 70%, 80%, even 90%, down to 37%. We deregulated the financial sector. We allowed corporations to use profits to buy back their own stock instead of investing in workers. We treated capital gains as sacred, but labor as disposable. And every time we questioned it, we were told, "Don't worry, be patient, it'll trickle down." But it didn't. It concentrated. It hoarded. Because here's the truth trickle-down economics refuses to acknowledge. Rich people do not spend their money the way working people do. A middle-class family gets an extra $1,000. They fix the car. They buy school supplies. They go out to eat. The money circulates. That creates demand. It keeps local businesses alive. A billionaire gets an extra $1 million. It goes into a hedge fund, or a Cayman Islands trust, or stock buybacks that inflate their own net worth. It doesn't trickle, it accumulates. And worse, it warps the entire system. Because when wealth concentrates at the top, power concentrates with it. And those who have the power write the rules. And those rules increasingly serve the few, not the many. That's how you end up with record corporate profits and mass layoffs in the same quarter. Just look at Microsoft and Intel right now. That's how billionaires build rockets to escape Earth if they don't spontaneously blow up on the launch pad, while American schools lunch shame kids over a few dollars of debt. This isn't just inequality anymore. It's economic cannibalism. We are eating the base of the economy to fatten the top. We're draining consumer power, destroying job stability, and undermining the very market of the wealthy claim to believe in. And here's the part that's truly dangerous. If ordinary people don't have money, they can't spend. And if they don't spend, businesses can't grow. And if businesses can't grow, even the wealthy lose in the long run. Because capitalism without consumers isn't capitalism. It's a Ponzi scheme. It's a house of cards. It's a snake eating its own tail, fueled by short-term profit and long-term blindness. Trickle-down economics was always a myth. But now, it's become a threat. A threat not just to fairness, not just to democracy, but to the continued existence of a functioning market economy. It's time we stop waiting for prosperity to trickle down. It's time we start building systems that lift from the bottom up, where real people live, work, and spend. Because that's where economic growth actually happens. And that's where our future depends. Let's talk about a universal basic income, or a UBI. But let's not frame it as a handout, or some utopian dream, or even a band-aid for poverty. Let's talk about it as infrastructure, because that's what it is. Think about what infrastructure actually does. That power grid doesn't just benefit the individual homeowner. It keeps entire cities running. Highways don't just serve the person in the car. They connect communities, enable commerce, and create flow. Water systems, public transit, broadband internet. These things aren't just public services. They're public platforms that everything else is built on. A universal basic income is no different. It's the economic power grid for a post-industrial, post-labor society. When you guarantee every person a basic monthly income, regardless of employment status, you're not just helping them survive. You're restarting the flow. You're putting demand back into the economy, precisely where it's needed most. That money doesn't just get hoarded in hedge funds. It doesn't disappear into stock buybacks. It doesn't park in tax havens. It moves. It pays the rent. It fixes the car so someone can get to their gig job. It buys groceries, pays the childcare bill, fills prescriptions. It goes to local businesses, the same ones struggling to stay open as foot traffic dries up. This isn't trickle down. It's bottom up. A UBI doesn't disincentivize work, That's one of the oldest myths, and it's a lie. What a UBI does is delink survival from employment. And that's a feature, not a bug. Because in today's economy, not having a job doesn't necessarily mean you're lazy. It might mean your job was automated or shipped overseas or made obsolete by an algorithm. And the jobs that are left, they're often low-paying, unstable, and exhausting. A UBI gives people freedom to say no to exploitation, to leave a toxic workplace, to care for a loved one, to go back to school, to start a small business, a nonprofit, or a creative project, to take a breath, to dream again. It's not about laziness. It's about dignity. It's about agency. And here's the thing. It's not just morally right. It's economically necessary. Because when millions of people can't participate in the economy as consumers, the system grinds to a halt. And when those people fall too far behind, the result isn't just economic stagnation. It's social collapse. That's what we're already seeing. Rising despair, widening inequality, political extremism, a collapse of trust in every institution. A UBI isn't charity. It's a pressure release valve. It's an automatic stabilizer for the whole economy. And unlike stimulus checks that come once every recession, or tax cuts that rely on outdated fantasies, a UBI is predictable, permanent, and targeted. It's like running an irrigation system through a drought-stricken field. You don't pour all the water at the top and hope it trickles down. You water the roots. And that's what a UBI does. It nourishes the foundation. Not for the sake of ideology, not as a welfare program, but as a new operating system for a world where labor is no longer the sole engine of income. The old model, work for pay, pay to consume, consume to drive growth, is breaking down. A universal basic income is a bridge to what's next. And the sooner we build it, the better chance we have of keeping this whole thing from falling apart. But let's be honest. A universal basic income has to be paid for. It's not magic. It's not free. And if we try to fund it by taxing the working class or even just the upper middle class, we're not solving the problem. We're just shuffling the weight around on the same broken backs. So here it is, plain and simple. We need to tax the hell out of extreme wealth. And I don't just mean tinkering around the edges. I mean confiscatory tax rates on the ultra-rich. I mean 90% top marginal tax rates on income that's measured in millions. I mean wealth taxes on billionaires, windfall taxes on corporate profits that aren't reinvested in labor or productive innovation. I mean closing loopholes, smashing tax shelters, ending the fiction of offshore invisibility, and bringing corporate giants to heel. Not because we hate rich people, not because we're jealous, not even because we think they're villains, although it's questionable with Musk, but because the system doesn't work without it. This isn't about morality. It's about mechanics. The economy is like a circulatory system. Money needs to move. It needs to flow through the whole body, not just pool at the top like a blood clot. But right now, that's exactly what's happening. The top 1% is hoarding the fuel the economy needs to run. Over the last 40 years, wealth has been extracted upward into private accounts, stock portfolios, and untouchable trusts, while the bottom 90% has been squeezed to the point of collapse. Productivity went up, wages didn't. Corporate profits soared, workers got laid off. The stock market hit record highs. Household debt exploded. And the ultra-wealthy? They didn't just win the game. They bought the casino. And here's the dangerous twist. Even they can't win if the system collapses. Extreme inequality isn't sustainable. It breaks economies. It breaks democracies, as you can see. It breaks trust, stability, and ultimately, it breaks markets. Because capitalism, at its core, requires consumers. And when the overweight majority of people can no longer participate meaningfully as consumers, the whole thing seizes up. So no, taxing the rich is not punishment. It's equilibrium. It's system maintenance. We tax the ultra-wealthy not to tear them down, but to keep the machine running. Because the money they're sitting on isn't circulating. It's not fueling small business. It's not creating jobs. It's not solving problems. It's just sitting, accumulating in places where it does the least good and the most damage. And look, this isn't about blaming individuals. Most billionaires are just responding to the incentives they've been given. That's what systems do. They shape behavior. But when the incentives reward hoarding over hiring, speculation over service, extraction over investment, then the incentives are broken. And they need to be changed at the structural level. That's why UBI and progressive taxation go hand in hand. UBI puts money in the base of the economy. Confiscatory taxes pull the excess out at the top before it can destabilize everything below. UBI creates demand. Taxation rebalances supply. That's not ideology. That's engineering. It's not about envy. It's about pressure, flow, and survival. You can't run a 21st century economy with 19th century tax policy and 20th century labor assumptions. We need a new model, one that circulates, stabilizes, and regenerates. And that means taxing extreme wealth, not as punishment, but as the price of participation in a society that still works. Because if we don't, then this whole thing, this economy, this democracy, this shared future, starts to look more like a countdown than a system. And the clock? It's already ticking. Now let's talk about corporations. Because while we've spent a lot of time focusing on billionaires and the ultra-wealthy, we can't ignore the enormous power and responsibility of the corporate sector, especially in a system that's increasingly been built around their interests. We've given corporations legal personhood. We've allowed them to spend unlimited money on elections. We've granted them tax cuts, deregulation, subsidies, and sweetheart loopholes. We've bailed them out over and over and over again. And we've asked for almost nothing in return. So if corporations are people, fine. Let's treat them like people. Let's hold them accountable like people. Let's tax them like people. Let's expect them to act like citizens, not looters. Because here's what we've gotten in exchange for all that deference. Gig work instead of stable employment. 30-hour schedules designed to dodge healthcare mandates. Mass layoffs even during record-setting quarters, or maybe especially during record-setting quarters. Offshore jobs, automated workflows, union busting, and CEO pay packages ballooning into the tens of millions. And perhaps worst of all, a business model that actively avoids long-term investment in people in favor of short-term returns for shareholders. That's not capitalism. That's extraction. And we, the public, we're left to pick up the slack. We subsidize, for now, low-wage workers with food stamps and housing assistance, although they want to end that to give even more tax breaks to the billionaires. We fund the roads their trucks drive on, the courts that enforce their contracts, the schools that train their workers, and the infrastructure that powers their servers. And then they use accounting tricks to pay next to nothing in taxes. In what world is that a fair deal? If a single mom working 2 jobs at a corporate chain pays more in taxes than the company that employs her, that system is broken. If a Fortune 500 firm can report billions in profits while simultaneously laying off workers and paying 0 in federal taxes, that system is broken. And let's be clear, high corporate taxes aren't job killers. What kills jobs is a race to the bottom, where corporations are rewarded not for creating employment, but for cutting labor costs, hiding profits, and gutting communities in search of the next loophole. If you want to build a healthy economy, you don't reward the companies that slash wages, automate recklessly, and offshore their tax obligations. You reward the ones that invest in people, that pay fair wages, that keep jobs onshore, that treat workers like assets, not liabilities. UBI can help sustain their customer base. It gives them more stable, more secure populations to sell to. In that sense, it's a gift to business, a permanent stimulus program funded not by debt, but by design. But in return, businesses, especially large profitable corporations, must help fund it. They must pay their fair share to keep the system from collapsing under its own weight. That means raising the corporate tax rate to historically reasonable levels, not punitive, just proportional. Closing the offshore loopholes that allow them to book profits in Bermuda while doing business on Main Street. Taxing stock buybacks, which enrich shareholders while avoiding reinvestment in people or infrastructure. Incentivizing actual employment and penalizing companies that treat labor as a disposable cost center. Because a system that endlessly rewards capital while starving labor will eventually consume itself. And look, we don't need every company to be a saint, but we do need a baseline expectation. If you do business in a society, use its laws, its labors, its roads, its power grid, its schools, you pay for the privilege. You don't get to free ride your way to record profits and then shrug when asked to contribute to the very system that made those profits possible. So yes, if corporations are people, fine. But let's stop coddling them like royalty. Let's start taxing them like citizens. Let's demand that they contribute to the common good or lose the license to operate within it. Because in the end, if corporations want the rights of people, then they can start shouldering the responsibilities of people too. But won't rich people leave? Isn't this socialism? What about innovation? Anytime you bring up universal basic income or taxing the ultra-rich, the objections come fast and furious. Let's take them seriously, and let's take them apart. Objection number 1. If you tax the rich too much, they'll just leave. This is the classic threat. Raise taxes on the wealthy and they'll move to Monaco or the Caymans and take their money and their jobs with them. But let's ask, leave what? Leave the infrastructure that educated their workforce? The roads and internet that connect their supply chains? The legal system that protects their patents and enforces their contracts? The currency that stabilizes their assets? The consumer base that buys their products? Wealth is sticky. People don't move billions of dollars in assets and operations like they're packing a suitcase. Yes, a few might try, but most stay, because wealth depends on stable societies. And the U.S., for all its flaws, is still one of the safest places to hold and grow capital. Besides, we already tax middle-class workers at the source through payroll and income deductions. There's no reason we can't design wealth and capital gains taxes that are just as hard to dodge. So no, this isn't about chasing the rich away. It's about making participation the price of admission to a system they already rely on just as much, if not more, than anyone else. Objection number 2. Isn't this just socialism? That one's a favorite, especially in American politics. But let's be clear. UBI isn't socialism. It's not about government owning the means of production. It's not about abolishing markets or central planning. The UBI is about ensuring a basic level of participation in a market economy. It's about capitalism with a foundation. It says you don't have to starve to be free. And as far as high tax rates on the ultra-rich, we've done it before. From the 1940s to the 1970s, top marginal tax rates in the U.S. were consistently between 70 and 91%. During that same period, the economy boomed. The middle class grew, inequality shrank, and innovation exploded. So if that's socialism, then it's the kind that built the suburbs, the interstate system, NASA, and the golden age of American industry. Objection 3. But won't people stop working if they get free money? First, most people don't work just for money. They work for identity, purpose, stability, challenge, or community. They work to build something, or to feel useful, or to contribute. Money's part of it, but it's not the whole story. And where UBI has been tested? In pilots from Finland to Kenya to Stockton, California. It doesn't make people lazy. If anything, it increases entrepreneurship, mental health, and educational attainment. People use the money to get out of bad jobs, abusive relationships, and cycles of desperation. They don't just sit on the couch. They build, they explore, they take risks they couldn't afford to take before. UBI isn't a hammock, it's a launch pad. Objection 4. But what about inflation? This one's important and real. Yes, putting more money in people's hands can increase demand. But demand alone doesn't cause inflation. Supply bottlenecks do. If supply can meet demand, prices stay stable. And here's the thing. UBI doesn't inject new money into the economy the way a stimulus check or money printing does. It redistributes existing wealth from those who are hoarding it to those who will actually spend it. If you're pulling dollars from offshore tax shelters and re-injecting them into the real economy, you're not creating inflation. You're restoring circulation. Also, we can structure UBI alongside price controls on critical goods like housing, healthcare, and education. Healthcare and education ought to be free, and I'll get to that. Which are the biggest drivers of inflation for everyday people anyway. Objection 5. But won't this kill innovation? No. In fact, it will do the opposite. Right now, how many people with good ideas never act on them because they're trapped by rent, bills, or medical debt? How many brilliant minds are stuck in dead-end jobs because they can't afford to take risks? How many entrepreneurs, artists, and problem solvers never get the chance to try? A UBI unlocks that potential. It gives people space to breathe, to experiment, to fail, to try again. And remember, the richest periods of innovation in American history were not when billionaires hoarded wealth, but when they were taxed, regulated, and pressured to reinvest. When the playing field is leveled, innovation thrives. Because it's not just the wealthy innovating for more wealth. It's everyone innovating for a better future. Objection 6. Won't this be too expensive? What's expensive is subsidizing poverty. What's expensive is mass incarceration, emergency room health care, and economic despair. We already spend billions trying to patch holes in a system after people fall through. UBI is cheaper than homelessness. It's cheaper than mass unemployment. It's cheaper than letting inequality spiral into violence, extremism, and collapse. And with proper taxation on wealth, capital, and corporate windfalls, we can fund it without taking a dime from the working class. It's not a question of money. It's a question of priorities. A final word on the objections. We've tried trickle-down. We've tried austerity. We've tried deregulation, privatization, and endless tax cuts for the rich. They don't work. What we're proposing isn't radical. It's rational. It's targeted. It's based on history, data, and the reality of the 21st century economy, where labor is no longer the dominant input, but people still need to live. If we want the system to work for anyone, it has to work for everyone. And that means confronting the myths, challenging the talking points, and choosing policy over propaganda. So let's imagine we've done it. We've implemented a universal basic income, enough to guarantee survival with dignity. We've restored steep progressive taxes on extreme wealth and corporate hoarding. The flow of money is no longer a trickle-down illusion. It's a wellspring recirculating through the whole economy. What happens next? This isn't a utopia. It's not the end of the problems. It's a blueprint for something we haven't had in a long time. A system that works for most people. Let's walk through what that could look like. Number 1, the end of scarcity panic. First and foremost, existential insecurity goes away. That gnawing anxiety. Will I make the rent? Will I afford groceries? Will I survive if I get sick? It fades into the background. Because now, every person has a guaranteed income. Not conditional, not means-tested, not buried under paperwork and stigma. Just there, every month, like clockwork. That one change reshapes everything. It gives people time to care for loved ones, to leave abusive relationships or jobs, to start businesses, learn new skills, or just rest after a lifetime of grinding. You want to see a mental health revolution? Start with a UBI. Number 2, the liberation of labor. Under this model, work becomes a choice, not a sentence. And guess what? People still work. But they work differently. Teachers stay in classrooms because they love teaching, not because they need a second job at night. Artists make art without starving. Caregivers, community builders, and volunteers finally get the dignity they've always deserved. And the jobs that suck? They get better because employers now have to compete for labor. You want someone to clean the bathroom at midnight? You'll need to offer a more than minimum wage. Suddenly, jobs become better paid, better treated, and more respected. Because UBI doesn't eliminate labor. It empowers it. Technology's eliminating labor. 3, innovation gets unleashed. This new blueprint isn't anti-capitalism. It's post-capitalism, meaning it builds on what worked and discards what didn't. And one thing capitalism got right? Innovation. But it also trapped innovation inside a cage of profit-first thinking. With a UBI and redistribution in place, that cage cracks open. A single parent can launch a startup without risking their kid's future. A recent grad can pursue climate tech instead of chasing venture capital. A retiree can write a novel, not drive for Uber. Human potential is no longer throttled by the need to survive. It's unleashed. And when more people get to contribute, regardless of background, status, or bank account, we get more breakthroughs, more creativity, and more resilience. 4, a regenerative economy. This new system doesn't just redistribute money. It redistributes power. The economy stops being extractive, where value is sucked upward and the rest get crumbs. Instead, it becomes regenerative. Local businesses thrive because people have money to spend. Co-ops and mutual aid flourishes because survival isn't zero-sum. Communities invest in long-term resilience, green energy, public spaces, education, because there's no longer living hand-to-mouth. Even corporations benefit, if they adapt. Instead of chasing quarterly profits, they're rewarded for real value creation. Hiring and training workers, paying fair wages, investing in the public good. Capitalism becomes a servant again, not a master. 5. Democracy deepens. When people aren't worried about feeding their kids, they can participate. They vote, they organize, they run for office. They demand better because they finally have the bandwidth to believe better is possible. We stop being an economy that's endlessly managing crises, poverty, homelessness, violence, despair, and start being a society that designs for human flourishing. That's the blueprint. That's the possibility. And here's the most radical thing about it. We already have the tools. UBI, tax reform, corporate accountability, democratic engagement. It's not a fantasy, it's a choice. The question isn't whether we can afford it. It's whether we can afford not to. So here's the bottom line. The old economic circle, the one our grandparents and even our parents lived inside, is broken. It used to have a rhythm to it. You worked a job. You got paid enough to live. You spent your paycheck in your community. That spending fueled businesses. Businesses grew, hired more people, paid more wages, and the cycle continued. That was the circle. Work, pay, spend, grow. A loop of mutual reinforcement. A system built on circulation, stability, and widely shared participation. But that circle? It's been shattered. Not by accident, but by decades of policy choices. We cut taxes on the rich. We deregulated corporations. We weakened unions. We celebrated austerity. We outsourced, automated, and financialized every part of our life. And what we were told was, don't worry, the wealth will trickle down. But it didn't. Instead, it pooled at the top, like rainwater in a clogged gutter. And everyone else? They've been asked to climb higher on a ladder whose rungs have been falling away. Now we're standing in the aftermath, a society where full-time work no longer guarantees stability, where debt replaces wages, where people hustle just to survive, and where the so-called recovery is something only the top 10% ever feels. We can't fix this by going backward. We can't duct tape over an old system and hope it holds. We definitely can't fix it with more tax cuts and wishful thinking. We need a new model, one that reflects reality, a model where basic income gives people a floor to stand on, so that survival isn't a luxury and dignity isn't a privilege. Confiscatory taxation reclaims extreme wealth, not to punish success, but to fund the infrastructure that makes success possible in the first place. Corporations pay their fair share, not because they're evil, but because the public shouldn't be subsidizing private hoarding. And prosperity becomes something we design, not something we gamble on. Because here's the truth. A UBI and progressive taxation aren't just policy ideas. They're the missing pieces of a machine that once worked and can work again. Not the same as before. Not a rewind, but a reinvention, rooted in today's realities, not yesterday's myths. A system where we engineer stability instead of waiting for luck, where the economy flows through people, not just around them, where participation isn't a luxury, it's a right. But to get there, we have to stop worshiping wealth. We have to stop pretending that billionaires are oracles, or that markets always know best. We have to stop defending a system that's already failing the majority, and start building one that actually works for the majority. Because when money flows, the economy grows. And when it doesn't, you get exactly what we have now. Stagnation, despair, disconnection, collapse. We don't have to accept that. We can complete the circle, not by nostalgia, but by re-engineering the system, intentionally, intelligently, and for everyone. The tools are in front of us. All we need is the courage to use them.